Imagine selling your home with just a few clicks. No realtors, no bidding wars, no endless open houses. That's the promise of Opendoor. But here's the kicker. This one struggling real estate disruptor just shocked Wall Street with a return to profitability, a CEO shakeup, and a stock price surge that investors are asking, is Opendoor the next big turnaround story, or just another meme stock bubble waiting to pop? Stick with me until the end of this video, because I'll break down everything: a latest earnings, leadership change, meme stock frenzy, technical signals like the Golden Cross, and most importantly, whether Opendoor is a smart long-term investment or a risky trap. Let's dive in. What is Opendoor? Opendoor is the largest iBuyer in the US. Business model: buy homes directly from sellers, relist them for buyers, and make money from spreads, fees, and services like mortgages and title. Mission: make selling a home as easy as selling anything online. Went public in 2020 through a SPAC, faced heavy losses when the housing market cooled during rising interest rates. Recent stock performance: current stock price around $3.60 as of August 18th. In the last month, shares have jumped over 25% after earnings and a CEO change. From a 52-week low of $1.80, the stock has doubled. Daily trading volume recently spiked over 300 million shares, a sign of retail frenzy. Analysts compare it to meme stock rallies like Carvana, AMC, and GameStop. Breaking down the news. 1. Profitability milestone. In Q2, Opendoor reported its first adjusted EBITDA profit since 2022. Net income was still negative at -$29 million, but losses narrowed significantly. Revenue came in at $1.57 billion, beating expectations. Investors saw this as proof Opendoor can still survive. 2. NASDAQ compliance. Earlier this year, Opendoor risked delisting because shares traded under $1. Now, it's comfortably above compliance levels, removing a big cloud over the stock. 3. Leadership change. CEO Carrie Wheeler stepped down. CTO and Chief Product Officer Srisha Radhakrishna is now interim CEO. Activist investor Eric Jackson pushed for this move, calling it a fresh start. Market reaction? Stock popped nearly 25% around this announcement. 4. Meme stock hype. Retail investors on Reddit's Wall Street Bets and X are piling in. Crypto influencer Anthony Pompliano even called Opendoor a potential comeback play. This social media buzz added fuel to the fire. Technical signals. Golden Cross, Opendoor's 50-day moving average, crossed above the 200-day moving average, a strong bullish indicator. RSI and MACD momentum also turned positive. Analysts at Stock Invest predict a possible plus 147% upside in the next 3 months, but with extreme volatility. Translation: short-term traders may love this setup, but long-term investors need caution. Risks and caution flags. Housing market. The U.S. housing market is still fragile. Mortgage rates remain high, affordability is low, and transaction volumes are down. Debt load. Opendoor carries significant debt. If housing slows further, liquidity risk rises. Speculative rally. Much of the recent surge is meme-driven. Price can easily crash once hype fades. Analysts at MarketWatch and Invez warned investors not to confuse retail momentum with sustainable fundamentals. The fundamentals. Q2 results recap. Revenue $1.57 billion, adjusted EBITDA positive, net loss narrowing. Gross margin improvement, better cost management and pricing tools. Business evolution, expanding digital home selling, mortgage offerings, and AI-driven valuation models. Long-term vision, make home transactions as seamless as Amazon made shopping. Bull versus bear case. Bull case, profitability milestone proves the business model isn't broken. Meme stock enthusiasm may push prices higher short-term. Golden Cross and technicals support a continued rally. If the housing market rebounds, Opendoor could scale profitably. Bear case, still unprofitable overall with heavy net losses. Housing slowdown plus debt exposure equals risk of another downturn. Rally is hype-driven, could collapse like other meme stocks. Interim CEO leadership transition creates uncertainty. Outlook and what to watch. Will Opendoor appoint a strong permanent CEO? Can they sustain profitability into Q3 and Q4? How will macro housing conditions evolve, especially if the Fed cuts rates? Will meme stock energy continue or fade? Conclusion. Here's the bottom line. Opendoor is at a turning point. On one hand, it's showing signs of life, profits, compliance, and fresh leadership. On the other hand, risks remain, especially debt and a shaky housing market. For short-term traders, Opendoor could be a wild ride with high reward potential. For long-term investors, it's a high-risk, high-reward bet that only makes sense if you believe in a strong housing recovery and Opendoor's ability to execute. As always, do your research, know your risk tolerance, and never chase a rally just because social media is hyping it up. Now, I want to hear from you. Do you think Opendoor is a true turnaround story like Carvana or just another meme stock waiting to crash? Drop your thoughts in the comments. And if you found value in this deep dive, hit that like button, subscribe, and turn on notifications so you don't miss the next big stock breakdown. Thanks for watching, and I'll see you in the next one.